Hi everyone, happy Friday. It's Adam here from Future Set Mortgage Broking, bringing you Friday mortgage tip, where we basically debunk some of the myths in mortgages, explain some of the jargon, and today we're just going to cover off fixed rates. So we get questions from clients, quite frequently around, should I have a fixed rate? And for me as a mortgage broker, I don't really tell people to have a fixed rate or not have a fixed rate. It's really a case of presenting the pros and cons of having a fixed rate versus a variable rate. Now, things to just sort of, explain with fixed rate is there might be attractive rates out there in the market. We have seen rates just starting to increase a bit in the recent sort of weeks. But the key thing to know with fixed rates is the consequences of having a fixed rate and one of those is having break costs. So if you fix a loan for 2 years or 4 years, whatever it might be, if you were to change that structure of that loan, during that time when you're fixed, then you'll be subject to break costs. Now, if you say you fix a loan for 3 years and you decide to change that structure of that loan within, say, a month of getting the loan settled, so you want to sell the house, you want to pay down more, whatever it might be, you're going to be subject to quite significant break costs, which could be like into the thousands of dollars. If you say, for argument's sake, were to change that loan structure or sell the house with, say, 2 months to go on your fixed rate period, then your break costs will be much lower. And with break costs, it's something you can just call up your lender, call up your bank, to say, look, I'm thinking of changing the structure of this loan, what would be my break costs? And they generally come back to you within a few days, just to let you know what that sort of fee will be. And it's always a good sort of starting point if you are looking to sort of refinance or draw equity out, just to find out what those break costs are. The other thing with fixed rates is if you were to fix your entire loan, so obviously a benefit of that is having sort of certainty around your repayments, which is great for cash flow and budgeting. But with a lot of loans out there, a lot of lenders, they don't offer offset accounts with fixed rate loans. So something to bear in mind. So if you've got a stack of cash in savings account, you may not be able to benefit from having an offset account with a fixed rate loan. So this is where you can come into the situation of having a split loan where you have a portion of your loan fixed and a portion of it variable, so you can benefit from features like offset. Fixed rates are good in certain aspects, and it comes down to really you as the applicant understanding what the pros and cons are, what the restrictions are, and what makes you feel most comfortable if you are to fix a rate or not. So again, always speak to your broker around that. No question is a silly question. If you need to talk to me about fixed rates, you want to explain it in a bit more detail, feel free to click the button or link below, book a time with myself for a chat. And yeah, hopefully look forward to chatting with you soon. For now though, enjoy your Friday and I'll speak to you soon.